Welcome to the Vancouver Resource Investment Conference 2025. So we are here with me is Mr. Randy Smallwood, the CEO of Wheaton Precious Metals. How are you doing, Randy?
Fantastic. Good to be here.
Yes,
Thanks for having me.
Good to see you again. We last talked last year. Maybe we can do a bit of a recapture some of the highlights and we talk about future as well. So let's start off with by you talking about, because last year sort of one of the major achievements of your company in a very eventful 2024.
Sure. So 2024 was a good year for us. Our production guidance was between 550 to 620, and we had 3 very good first quarters. So we haven't released our fourth quarter yet, but looks like we're definitely going to be in the upper end of guidance. So we're pretty happy about that. But we're also kickstarting a real extended growth period, and that's probably what I'm most excited about is the fact that we've got good, strong growth over the next 5-6 years, probably 50, with the acquisitions we made in 2024, it's pushing us up now over 50% growth over the next 5 years. But 2024 specifically was good for us from the acquisition front. We made 3 acquisitions, a couple of smaller ones, and then the main one was with Montage Gold on the Kone Project in Côte, western part of Africa. It's a really strong gold project, and we're going to be seeing by 2027, at the end of 2027, it'll be running at a run rate of around 60,000 gold ounces per year being delivered to us from this project. So really excited about that project coming into play. And of course, that's bumped our already sector-leading growth profile up to now, as I said, up over 50% over the next 5-6 years.
So out of all your projects, which of your next projects will soon come into production, maybe this year or the soonest?
Well, I mean, Salobo's just finishing off its 3rd phase expansion. They're getting up to that full run rate. They've had a really good 2024, and so in fact, for a large portion of the latter half of the year, they were running at their design capacity, which is really impressive, considering phase 3 only came on about a year ago. And so Salobo's going to continue to do well. We expect 2025 to be a good year for Salobo. But in terms of new production, probably the one I'm most excited about is the Blackwater project. Artemis Gold, Blackwater, it's right here in British Columbia, and it's expecting to pour gold any day now, should be by the end of this month. They're pushing forward on this one. Blackwater is one of the easiest mines I've ever seen in terms of from a mining risk perspective. The ore body sits right at surface, just about a 0 strip ratio for the first few years, where they're chasing it down. Everything goes by gravity. They haul it down to the mill. Everything goes to the tailings pond, the waste dump. Everything works. It should be a very, very easy build for them, and it has been to date. No real issues on the construction side, and so we're expecting to see probably about 40,000 ounces a year. This year will be a startup year for them, but by next year it'll be a main contributor, another major contributor to our portfolio.
So looks like a great news for your company coming in very soon.
Yeah, we've if there's one negative to recent is that most of the deals we're doing are gold streams with gold mining companies. My preference is actually to do gold streams from copper mining companies, because all copper mines produce a bit of gold, and I always like that better. But we're not seeing the big capital outlays, the big capital commitments into the copper space yet. And so we're seeing a lot of gold opportunities from gold mining companies.
So without giving away any trade secret, I'd like to ask you this question. What sort of a typical procedure from the beginning until the end in terms of a transaction? When you look at the deal, start from the beginning, how your team works through it, and say negotiation and say, oh, this is a deal that we want to strike the transaction. So tell me a bit about the process.
Sure. The key for us is technical quality, technical excellence. And so I'm a geological engineer by background. My focus is on the technical side. We've built a team. We're only 43 people in the company, but half of us are technical. We're either geologists, metallurgists, engineers, or social scientists in terms of project risk, assessing and managing and monitoring project risk. And so the deal process starts off with an initial reach out. If we know someone needs capital, we'll reach out. If they know they need capital and are looking to source, they'll come and talk to us, and we'll come up with a very rough indication of value, an IOV we call it. It's a first stage process based on public information and what you expect to produce. This is what we think we can do for you. Some of that comes to tailoring it to what the company wants. How much money do they want? What kind of a structure do they want? What commodities do they want to stream, et cetera, et cetera. But it's that's the formative stage. But if there's an interest level, and there is a lot, because our deals are so attractive and well priced, especially compared to other sources of capital, typically we wind up going to a next stage, sign the non-disclosure agreement, and dive deep into the data. Go into the data, we always build from first principles. So we have a strong belief in our business that we must own our decisions. We can't blame someone else. So if my partner doesn't produce what they say they're going to do, and we miss on our side, I'm not going to blame them. We should have known that. We're technical experts. We're supposed to be able to assess that risk. So we always build from first principles and we monitor from first principles. We get all the way back to the drill hole data, the resource, the geological resource modeling, the in-pit model, mine modeling, process engineering. We review everything. We build up our own vision of what this ore body can produce. And that's what we bid on. And usually we come forward, rarely is it the same as what's been put forth. And it's actually a healthy exercise because it's a fresh set of eyes on a database that's had only one set of eyes working on it and advancing it. So a lot of times we find hidden opportunities in there. We also find risks. That's the key thing. We want to find the opportunities and the risks, the dangers. And so inevitably we get through to that point where we come up with a production profile that we're comfortable with. And then we start applying discount rates. Our discount rates, we're actually pretty scientific on that. How do you rate that value over time? And that's where we capture the risks. So every project has different risks. And we'll range from expected discount rates somewhere 5 to 7%, all the way up to 15% sometimes. Again, depending on project risk, partner risk, political risk, project metallurgical risk, etc. That all factors in. Ultimately, it comes down to a dollar value, how much up front, and what production payment do you want us to make on a per ounce basis when you deliver the metal to us. And so it's a very healthy process. We need to be rigorous. We need to be thorough, because these are life of mine investments. When we invest into these, we expect to be in this agreement for the life of that mine, which hopefully is a very, very long time.
So in moving forward this year, what sort of capital allocation do you have for, let's say, acquisitions, shareholder returns, or partnerships?
Well, we finished the third quarter with just under $700 million cash on hand. And fourth quarter was good for us, but we haven't released our financials yet for the year end. So we've got plenty of capacity. We've also got a $2 billion revolver. We do have a residual payment to make to Vale on their third phase expansion. That's about $140 million. We've got some other construction funding that we're going to be putting in. I'm going to guess that existing commitments over the course of the year, probably on the order of $400 to $500 million going out the door. But we're generating this year should be well over $1 billion in free cash flow. So what do I? People ask me, what do you lose sleep over? What do I lose sleep over? Where am I going to put this money to work, right? We are very, very selective. We really want to focus on quality, and so that's one of the reasons. One of the first hurdles that a project has to pass is where does it fall on a cost per ounce basis in the cost curve. We always want the most profitable assets because those are the ones that get reinvested into all the time. And so, as long as we keep focused on that, we'll continue to put that value forward and put that value back into the ground. And last year was a good one. We committed just over $900 million on different projects. The year before we did $1.1 billion. So those commitments, they're about equivalent to what our cash flows are. Perfect world. We'll add a little bit of growth to the dividend. We've committed to doing that on an annual basis. We already have a higher percentage of our revenue going back to our shareholders than any other company in the space from a dividend perspective. So we're very, very supportive on that front. So we'll continue going down that path.
So with so much things going on globally in terms of the geopolitical situations among the worlds in different parts of the world affecting gold price, obviously, and silver price, how do you see that and anything that you focus on or not focus on to affecting your business kind of thing on a daily basis?
I don't think I've ever been more excited about gold prices and silver. Actually, to be honest, I'm actually more bullish on silver than gold because you've got the add-on of industrial demand on the silver side, and that's not going away. In fact, I think that's going to continue growing because what we all know is that the more silver you use, the less energy we waste, and that's an important thing. And so we're going to see more and more silver used all the time. But where I'm bullish about gold is that we're strong. Currently, we're strong gold prices in the face of a strong U.S. dollar. That's very rare. It's not often that the U.S. dollar and gold move in tandem. And the fundamentals behind gold are way stronger than the fundamentals behind the U.S. dollar. The only benefit for the U.S. dollar is that there's no stronger equivalent out there. There's no alternative for us to use as a reference currency. But gold is going to become digital. Gold ownership, the gold tokens, a responsible, trustworthy gold token is coming. And when that happens and gold becomes digital, I think gold is actually going to retake its position as a reference currency around the world. And that broad acceptance, the potential in terms of the price of gold is incredible. And so I'm really excited about that on the longer term. In the shorter term, I think central banks are going to continue buying gold around the world, mainly because they're concerned about how many US dollars they have in their central bank treasuries. That's not going away. In fact, I think that's probably going to pick up more and more as people get a little bit more concerned. It's an interesting day today. Today, Trump got inaugurated, and so he's already backed down from some of his threats. But I think it's going to be a very volatile next 4 years as we learn how to live with President number 47.
Thank you for your time, for sharing your insights with us about the gold industry and Wheaton, of course, itself.
Always a pleasure. Thank you.
Thank you.